VAT applies tax at both charges and reclaims tax at each level of the economic cycle. So if a man digs stuff out the hole and he sells it, then he charges VAT to the person he sells it to. That person then turns it into something. He charges VAT onto the person that buys that off him and reclaims the VAT that he paid originally. What we're talking about here as the sales tax option is simply a charge to be levied at the point of retail, as I understand it. So America has sales tax. It does not have VAT. America's the biggest economy in the world that doesn't have VAT. And I know some people have been saying, oh, well, this is VAT. It's not. It's also probably constitutionally different because VAT is a European Union beast. So it would be a big win administratively, I think, because if you remember the original framework agreement from a billion years ago talked about
the New
VAT.
Year's Eve one.
Yeah, the New Year's Eve one. That talked about VAT on goods, didn't it?
So it would be a good win for Gibraltar
administratively.
If we've moved from VAT, which might have been an option, to a sales tax, which you're saying is materially different.
Much easier to administer for the traders. Obviously, look, people are always going to say, "Oh, there's a tax. There wasn't a tax, and now there's a tax." But if I've actually administered a VAT in a business that I used to own in the UK, I don't want people to have to do that. It's a nightmare. It's very, very complicated, and different rates, and some exemptions, and some zero rated. It's just very difficult to administer. And given that we'd be going from a standing start to a highly complex system, I think it's a win that it would be sales tax rather than VAT.
I'm probably being overly simplistic, but if it's a percentage that you're looking at on importation, then the percentage applies to the value of the imported goods alone. Whereas if you add that percentage to the point of sale, then at that point it also includes the profit that the trade is looking to make, and therefore I don't know how those two things can be the same. Presumably, if it's at the point of sale, then it has to be a lower percentage than if it was.
Well, yeah. So you would be assuming that you would get an equivalent rate with both options. I don't think I've seen anything that says that's assumed. If it's, and it would be the obvious way to do it. It would be to charge a lower rate than you would do on import if you were going to apply it as sales tax. It depends. I mean, the object, as I understand it, of this is to satisfy the European Union, so that we can interact with the single market rather than as a purely income raising objective for the government. So if they're being driven by that external factor, and this is a price that we pay for the free border that we're talking about. Nearly all countries in the world have some form of sales tax or indirect taxation on the sale of goods and services. This is not services, by the way, as far as I'm aware. So it's not. It seems daunting because we've never had it before. But if you look around, everybody else has pretty much got something. So I don't think it's impossible to deal with, but it will need time and effort devoted to it to make it work.